All right, everyone. Thank you for joining us once again on the TradeXchange Week Ahead webinar. We want to thank everyone for coming today. Everybody on the Zoom calls, our members on our streams. We want to thank everyone for the recent understanding in regards to a few of the missed weekend webinars. There was a cold that came through the TradeXchange team, and we've been in and out for the past couple of weeks. So today we wanted to do a quick one because a lot have asked in regards to this quick webinar. And here we go. As always, this is recorded and will be posted on all our social media feeds. So we had another interesting week in the markets. The NASDAQ, which is up 5 weeks in a row, ended the week up over 3%. The Dow, though, which has not seen the recent strength as NASDAQ, ended the week lower, continuing to underperform, even though the NASDAQ is up over 14% for the year. Like we said at the beginning of the year, this market is acting like 2020. All the names that were basically destroyed from last year and all the small cap names are starting to see a lot of volatility to the upside. We're starting to see moves in small cap names up 100, 200, 300%, some on no specific headlines. But following that, we're also starting to see recently a slew of offerings coming off of those small cap moves. So it reminds us of what things were like a few years back when the momentum was straight up to the upside on no specific headlines, just on the fact of the mindset that everything is going to go higher and it's the fear of missing out. So that's the mindset we're starting to see that we actually started to say in the beginning of January in regards to the NASDAQ and small cap names. And what has happened, we've seen strength across the board in both those areas. And it is quite shocking to say some of these names of these moves is quite interesting. Two things that happened this week that need to be discussed. First, above all we can say is wow on that on that economic payroll report on Friday. We know everyone is throwing cold water on that report, but a number like that cannot be ignored. Unemployment rate not seen since 1969. The funny thing about all this is we are hearing non-stop of layoffs and job freezes across the board, especially in the tech area. How is this not an issue for the Fed? We don't know. The question always comes down to what is the Fed mentality when it comes to these employment numbers. They always state their dual mandates, prices and employment. Now we have inflation in the mix. So if employment is not weakening as they are hoping, what is the Fed going to do? Will they eventually just let it go, or will it come back to bite them down the road if things do not change on the employment side? The second aspect, we had the Fed announcement, which came out as expected across the board, in our opinion. But one key thing that Fed Chair Powell stated on his press conference was the word disinflation. That term gave the momentum traders that extra aspect of saying, okay, the Fed is not going to do anything as of now. They don't see those financial conditions easing. They see the recent activity in markets as disinflationary. In our opinion, is that the transitory aspect of what they discussed prior to inflation? Hopefully not, but we always must be understood that the fact that that could be something that needs to be watched as inflation numbers continue to come out and Fed speakers start up again coming up this week, which we'll go over on our week ahead report. The other aspect are earnings. So we're halfway through earnings. One thing that we have noticed is we are seeing mixed results on the earnings side. We are on the lower side on positive surprises. On a typical year, in regards to earnings, The average beats are around 77 to 78%. We are currently under 70% on earnings beats so far. A majority of those names are some of the biggest mega cap companies that are in the indexes: Apple, Google, Amazon. All three, which came out last week, all showed that things are not as peachy as people are believing. But as we mentioned at the beginning of this call, we are in that FOMO moment, the fear of missing out. And all you're seeing across the board are people saying, this is the time to buy. This is the time to buy. As always, we always say, do the due diligence. There's thousands upon thousands of instruments to play in these markets. And at the end of the day, we're here to not only help make money, it's also help protect money. So that is where we always say, keep an eye on a broader base outside of just a FOMO moment, because that could change overnight. And as always, we must adapt to what the market is telling us. Right now, it's momentum, it's volatility, and it's upside moves. Until that changes, that is what the mindset is across the board on Wall Street. Our thought process, as always, with January is that quote, as goes January, so goes the year. We shall see, but the volatility is definitely here, and we do not see it stalling anytime soon. Let's go over a quick week ahead, give you our insight in what we'll be watching in the markets. Not much activity on the economic side this week. As we see, we do have some big earnings coming up: CVS, DuPont, Kellogg's, Pepsi, Pinterest, PayPal, Tapestry, Take-Two, Under Armour, Uber. So we do have names still coming up across the board on earnings. Monday, starting up with Fed Speak. We got Fed Speak's Bullard. Tuesday, we had Fed Speak Powell and Barr. So we know a lot of people are going to be keying in on Fed Chair Powell speech this week. It'll be interesting to see if there are any changes, even though the press conference was recently, if there are any changes to his commentary once his commentary came out and the markets acted the way they acted. It'll be interesting to see if he mentions anything in regards to financial conditions easing in regards to stock market activity. Wednesday, more Fed speak. We have Williams, Cook, Barr, Kashkari, and Waller. Thursday, we have a little on the economic side overseas. We have Germany's CPI and China's CPI and PPI. And on Friday, on the U.S. side, economic-wise, that we'll be watching is the consumer sentiment. And again, Fed Speak, Waller, and Harker. Remember to keep in mind, these are just scheduled speakers. So we do have, throughout the week, we may have interviews on some financial medias. We have commentary in regards to interviews. So that is always something that we mention and discuss in the news desk, as well as the squawk. Company events for the week. As always, we have them here. If there are any questions or comments, as well as the top conferences, shoot us an email or reach out to us at the desk. We can give you a breakdown of who is presenting at these conferences. A little week ahead for TradeX commentary. And we have the U.S. economic calendar. As we mentioned, not much looking this week. Tuesday, we'll be watching, outside of all the Fed speak, consumer credit on Tuesday afternoon. Wednesday, as always, the petroleum report. Thursday, as always, your nat gas report, initial claims. And Friday, we do have your consumer sentiment to get a feel on how the consumer is acting. On the international economic side as well, not much this week going on. Earnings, we do have a slew of earnings yet again. We've been through that list, but as always, we do provide you a full list on your week ahead. We do bold out some of the big names that are reporting throughout the week. Your fear and greed index, clearly on the greed side. We've been seeing that for the past couple of weeks. That is continuing moving forward. Your weekly sector performance, a lot of weakness in energy as of late. It's an interesting mindset. The names that got hurt last year are outperforming this year. The names that outperformed last year are getting hurt this year. And what do we have? We have energy getting weakness, communication services, and technology, the strongest across the board this week. Your annual industry comparison against COVID, we are starting to see that upside move, members, continuing, bouncing off those levels that we saw previous and continuing to the upside. Your 10-year Treasury maturity minus 2-year, continuing at lows. This is a recessionary chart that is used. A break below this level typically is a sign of recession coming. So we'll see if that pans out. Your target probabilities for the March meeting right now, the mindset is of a possibility of a no change, but the average is looking at that 25 basis point hike. Your AAII investor sentiment survey, continuing on a little uptick on the bullish mindset and a downtick on the bearish mindset, as we've been seeing that strength in markets starting off the year. Your year-to-date returns. Lumber continuing up over 33%, NASDAQ up over 14.5%, S&P up over 7.7%. Copper did see a downtick this week, dropping about 5%, still up on the year. And we did see that weakness in nat gas and the energy plays, members, the weakness continuing. Nat gas down 46.7% year to date. What a move. Heating oil down over 17%, almost a 15% drop from last week. Crude oil, almost an 8% drop from last week, down 9% year to date. Gasoline, almost over a 10% drop. Last week we were green on gasoline year to date. Now we're down 6.34%. Once again, members, your sector outlook, communications services, the strongest, up over 20%. Consumer discretionary up 17%. Information tech up close to 14%. If you do recall, these three were the weakest at the end of last year. So we are starting to see that turn in the markets, as we mentioned in the beginning of the year. Your IPO lockup expirations, as well as your expected IPOs for the week. Some FDA calendars awaited for the week, on one on Monday and one on Friday. And we'll jump into charts. As always, members, any questions will be answered after our chart views, as well as any questions that were sent to us throughout the week and over the weekend. Gold. What can we say about this chart? No changes to this chart, members. Once this uptrend was broken, a complete collapse to support levels at the 1875 level. This was a pure technical move on gold. This chart hasn't changed, I don't think, for weeks. So this uptrend was a clear indication since it was tested once, 2, 3, 4, 5, 6, 7, 8 times. Once that 9th time, I guess, was the unlucky test, and we saw that weakness. SPY daily, no changes to the chart. Last week we mentioned a watch above the 410s level break, and that is what we got. We hit resistance levels at 418-ish and paired that off to end the week at 412. So we were watching that 410 level upside move. We saw strength right through it, hit a high of 418, paired off back to that support level. So we're watching SPY daily as it's trying to build a level in this support range. NASDAQ daily, no changes to the chart. Last week we mentioned that we finally broke above that 11,500 range. This long range that goes back until September. We broke above it. We saw the strength come with that upside break, hitting highs to that resistance level, similar to the SPY, paired off a little bit, ended the week at 12,000. So we are watching this level once again. If we see a retest of that 12,250s upside, or we're going to see a retest of that 11.5 support level. SPY daily with a more moving average and trend line look, as well as your triple Q daily and your IWM dailies. Here's a 10-year yield daily testing with your moving averages. And we have a breakdown on your 10-year daily. No changes to the chart. We are watching and continue to trade inside this range on a range-bound move on your 10-year yield. We're watching for that upside or possible downtrend break, or we're watching for the downside move below 3.4% with conviction rather than a 1 or 2 day move. Next up is your diamond daily on a moving average look and your IWMs. No changes to the chart. Last week, we mentioned a key level of 190s to the upside. We tested that twice in November and we tested it in December. Once that level was broken on a fourth test, a vicious move to the upside, straight to that 200 level resistance and a small pair off to end the week. So we are watching this level. Clearly, there's not much. There's a lot of air in between here. So we'll see if this is something that will be built upon, or we're going to see a break to the upside above that 200 level or a retest of the 190s key support level. HYG daily on the moving average play. S&P 500, we added a 4,200 level resistance level as we did see that break above 4,100 that we talked about last week, and tested 4,200 that we talked about in the news desk this week as a key level to watch to the upside. We tested it and sold off on that level, ending the week at 41.36. VIX continuing to make these tests on the bottom. We'll see if we have a reversal to the highs or what comes of it. But as of right now, members, the market volatility on the VIX fear index side is at the lows. Next up, we have oil. No changes to the chart. We mentioned last week, oil is testing a key resistance level in the 82s level. We tested it, could not break above it, sold off with volume to lows, ending the week by lows around 73.20s. So we are watching this level and that 70 level key support level for the possible next move on crude oil. US dollar daily, no changes to the chart. What a crazy week for the US dollar. We saw an initial break below 102s, followed by a huge reversal day and strength to end the week, breaking this downtrend. Now it's key to keep an eye on this downtrend. If this downtrend break continues to the upside, we'll be at the 104, 105 level resistance, which will be very key as well for a continued move to the upside. And then we have Bitcoin. Bitcoin right now broke above all its levels, trading in a range very similar to what we have over here. So we are watching Bitcoin closely to see if we break that 22.5 on the downside for a retest and fill in that gap around 20,000, or we see a test of 25,000 and we have nothing till 30. So we're watching Bitcoin very closely. And we have SMH daily on a moving average look. So members, that's a breakdown of your week. As always, we'll add some commentary and answer some questions right now. We're going to take a quick mic break so we can just go over the questions via email, and we see a few questions in the chat box. We'll go over those as well. Give us a few seconds. All right, we have a question in regards to proposed platform updates plan. Yes, we are having we have a few updates actually coming, members. We'll be having our community chat room, which we are currently testing right now. We want to make sure that that is going to be a successful right off the bat. So we are doing some tests on the community chat room, which is including our TradeXchange bot, which will have access to all our information in real time. In case you don't want to have numerous rooms open, you'll have access to all our info as well as the community room. It will be open to all members. It's a community room where you can share ideas, thoughts, questions, comments, concerns. We are very excited about that. We are doing two different tests. Just to let everyone know, we are running a Discord test, but we're also running a news desk test. So our news desk will have a secondary option which could be opened up for members. All you do is click on that and you'll have access to the news desk. So we are working on two different areas. That is why it's been taking a little longer than expected. We want to make sure that everyone, every feedback that we've gotten so far is looked at and is taken care of prior to the release. But yes, that is something that we're very excited to bring to our members, as they are also very excited to join that chat and share ideas and thoughts when it comes to this market. We also have our new and updated squawk coming. We're actually testing that out as well. It's going to be a faster, cleaner, smoother squawk. It's going to add the ability of having during the day, we'll be able to do a quick tidbits on the markets that are not going to be actual squawk, but it will be added to the drop-down list of information-wise when it comes to our squawk. So it'll be like a little miniature podcast, I guess you can say, that will be added to the squawk list, but it won't be on the live squawk. That will be set just for information and news. And we have a lot of other things coming that we're very excited about in regards to some new relationships we're building upon that could benefit all our members when it comes to information and content. Another question we had is one from our email now, is our thoughts for the week. Members, this week, as you can see, there's not much on the economic side. So we think this week's going to be focused on Fed speakers and earnings. Even though a lot of the big earnings have already come and gone, the fact that there are really not much on the agenda for the week economic-wise, we are going to be focusing a lot of time in regards to Fed speak and earnings. We'll see how other Fed members interpret last week's comments by Fed Chair Powell, and we'll see if anyone throws any water on the fire in regards to his commentary regarding disinflation and the fact that there was no mention of any financial conditions easing. So we'll see if that is any commentary coming up for the week on the Fed speak side. One of the questions, do we know if institutions have been involved in this rally? From what the people that we've spoken to, a lot of people have been caught offhand in regards to this rally. A lot of traders have been short these names that have been getting hit. Carvana, CVNA, Beyond Meat, BYND. These moves that we've seen this week in these names are not followed by news headlines. They're followed by momentum. And from what we hear, a lot of traders, big traders, individual traders, have been caught on the sidelines, a lot of them short these specific names, not expecting to see this kind of rally going on in the NASDAQ, as we've been seeing since the start of the year. So yes, from what we're hearing, a lot of people are being caught. A lot of people are running, jumping into this market on the fear of missing out. You can even hear it on some media sites, commentary from their contributors saying that a lot of people are chasing this market. But in reality, what has changed in the span of a month and a half that has given this such momentum to the NASDAQ? People are saying it's Meta, but what about Amazon? What about Apple? What about Microsoft? What about Google? You can't always just put it and pin it on one specific name. In this business, we realize you have to look at the broad view of markets to get an understanding of what the direction is. And right now, in our opinion, it's momentum, momentum, momentum. It's party like it's 2020 now. And that is what's going on in our opinion. It's not backed by anything specific that we've seen, but to each their own. And as we always say, do due diligence when it comes to the market. Our job is to provide you the content and information of what we're hearing and seeing, and hopefully that benefits all our members. We're going to go quick and mic silent. We have one more question on the email side. If anyone has any questions in the room, let us know. One question was in regards to our charts. Members, yes, we provide these charts on a weekly basis. We try to give an insight into what we're looking on the technical side of the market. We always ask members if you have any specific charts or individual charts you want us to add week by week, let us know. We'll add those in there, give you some commentary in regards to what we're looking at on the technical side. And that's it. Members, we want to thank everyone for joining us once again for the Week Ahead webinar. Thank you to everyone for understanding in the past couple of weeks. We have not been around. We could not get this done. We're glad to be back. We're glad to have a group joining us today. Enjoy the rest of the weekend, and check the news desk to get yourself ready for Monday's open. Thank you. Enjoy. Trade Exchange out.